The rich don't avoid taxes illegally. They understand the system better than everyone else. Most people believe that the more money you earn, the more money you keep. But in reality, something very different happens. The more you earn, the more you pay in taxes. And this is where one of the biggest financial differences between the rich and the middle class begins. Because while most people simply pay taxes, the rich understand how taxes work. And more importantly, they understand how to legally reduce them. The history of taxes, simple explanation. A long time ago, taxes were not applied to everyone. In many countries, taxes were originally introduced as a way to collect money from the rich. Governments told the middle class, "We are taxing the rich to support society." And people supported this idea. It sounded fair, it sounded logical, but over time, something changed. Taxes expanded, and eventually, the burden shifted. Now, instead of only the rich, the middle class pays a large portion of taxes. Example: imagine a system where the rich are taxed first, then businesses are taxed, then individuals are taxed. Over time, the structure evolves. And now, employees pay taxes directly from salary. This is called income tax. Before they even receive money, tax is already deducted. How the rich think differently. Most people follow this pattern: earn, pay tax, spend, save. But the rich follow a different pattern: earn, invest, reduce tax, spend. This small shift changes everything. Employee versus business owner. Let's compare two people. Person A, employee, earns salary, tax deducted, uses remaining money. They have limited control over taxes. Person B, business owner, earns income through business, pays expenses, pays tax on remaining. They have more control. Example: imagine both earn $5,000. Employee, tax first, maybe $4,000 left, expenses. Business owner, earn $5,000, pay expenses, office, tools, tax on remaining. This is a huge difference. The power of corporations. Corporations are powerful because they provide structure. They allow the rich to manage money differently. Simple explanation: a corporation earns money, it pays expenses, then pays taxes on what remains. Individuals earn money and pay tax first. Example: let's say you earn $5,000 salary, tax $1,000, left $4,000. Now imagine business, earn $5,000, expenses $2,000, tax on remaining $3,000, tax is reduced. Important point: this is not about avoiding taxes illegally, it's about understanding the system and using it intelligently. Why most people don't know this? Because financial education is missing. People are taught, work hard, get a job, pay taxes, but not taught how money flows, how businesses work, how taxes function. Let's imagine two people again. Rahul and Amit. Rahul works a job, earns a salary, pays tax, and spends what remains. Amit starts a small business, learns the tax system, and uses expenses wisely. After years, Rahul stays in the same cycle. Amit, on the other hand, builds wealth over time. The big lesson is, the rich don't just earn more, they understand the rules of money. And once you understand the rules, you can play the game differently. You don't need to start a big company. Start learning. Understand taxes, investments, and cash flow. Then, gradually build assets over time. The biggest difference between rich and poor is not actually income. It is knowledge. Knowledge about money, about systems, and about opportunities. So instead of working harder, start learning smarter. Because once you understand money, everything changes.